So Facebook reported earnings just moments ago.
The stock is just about holding its own. Let's bring in Victor Anthony, analyst at Topeka Capital Markets, and our own Joe Ling Kent is still with us. Victor, let's talk first about ad revenue. Did that disappoint you in any way? Because it seemed that something disappointed the market after hours. Victor, can you hear us?
Yeah, I'm here. Sorry. Listen, I think, the ad revenue growth was 53% year over year. It just came in about 2% ahead of my 51% year over year estimate. So it was a slight beat. It wasn't, a huge, humongous beat, which is probably why you're seeing the market not really reacting.
Okay. Joe, you've had a chance to go through some of these numbers. What nuances did you see? Was it anything out of autoplay or Instagram? Everybody's waiting to see some type of monetization out of those areas.
Yeah, we really are. I think that mobile really is the story here. We're talking about a huge jump in revenue overall. Mobile revenue made up 69% of all ad revenue in the last quarter. You do a comparison of that, 53% came from mobile year over year. So you compare that to a year before, you see a significant jump. Also, take a look at this. Overall monthly active users, 1.39 billion users. So we saw some pretty significant growth on that end. But of that, mobile monthly active users, 1.19 billion. So you see this mobile play that Facebook has pushed very hard into actually starting to pay off a little bit more, Liz.
Well, it's paying off. On the other hand, the stock is not paying off from the results of these earnings. It ended the day at 76.24. It's now about the same, $76.10. Victor, you have a price target of $96 on the stock. Why so high?
Well, it factors in, incremental revenue and profit contributions in this year, 2015, from Instagram, from video ads, largely, as well as from the mobile ad network, which will make its way into the numbers as we progress through 2015. So, the numbers today, I think it was just a slight beat, about 2% above, consensus for the revenues. The EPS was about 6 cents above, but I think the big part of that was really the tax rate was much lower than I think what the street was modeling. So overall, it's a good print, good solid number, good solid mobile number, good solid growth, but it wasn't I think a significant beat versus expectations.
Okay,
when you
the ask is actually just a penny or so, or a couple pennies higher now than the closing value. So that certainly intimates that the market is watching. Investors are starting to read more deeply into this. I think, Joe, people over the past couple of quarters have watched user engagement very closely. They want to see how many times do people check that Facebook page. What do we see from user engagement here?
We have really big numbers. Daily active users, 890 million. So that's very significant. When you're talking about a total MAU of 1.39 billion, that's a huge percentage in terms of Facebook engagement. A lot of Facebook revenue, of course, driven by the mobile ad network. We talked about that earlier. What we're going to be looking at moving forward is how they're going to monetize Instagram. Mark Zuckerberg said previously that he didn't want to monetize Instagram until it got to 1 billion users, but that actually happened already. They're already doing ads. It's actually relatively successful. We don't have all the numbers on that yet, but no mention of WhatsApp in this earnings report. I expect we're going to hear something from the call later.
All right. One final point, Victor, is that Zuckerberg kind of scared a lot of investors when he talked about investing aggressively, his phrase earlier in the year. Did he ever expand on that to satisfy investors at all?
Well, I think, throughout following investor conversations, a big chunk of that spend was really due to Oculus to make that a virtual reality device more mainstream product. But I expect them to reiterate that expense guidance on the call. But I do note in the past 2 years when they've given out expense guidance, they've always beaten that expense guidance. So I expect the same as well. They'll come in better than what they're forecasting this year.
Okay.
Good stuff. Victor Anthony, thank you very much. Joe Ling Kent, great analysis. Appreciate it.